I'm going to show you the exact scan settings I use to find stocks right before they blow up. Using the scanner, I found my best ever trade on Riot, which netted me over 2,000%. It also found me Home Depot, which netted over 600%, as well as HIMS and PLTR that both netted me over 700%, plus many other trades allowing me to make 6 figures trading. And it also allowed me to grow over 5 different small accounts by 400% in just a few different weeks. I'm about to dive in, but stick until the end because I'm not just going to show you how to find these stocks, but also show you how to trade the best options on them to catch these big moves. This is Finviz. Finviz is a completely free scanner online. You can go to finviz.com and use it. Now, when you get to the site, it's going to look like this. What you want to do is head over to the screener tab because we're going to be using the screener to basically cut down this huge list of 10,000 different stocks to a list of just a few that we can use to find stocks before they blow up and then trade the option. So once you get to this page after description, you want to go ahead and click all because that's going to show you all the different filters that we can do, and then we can really start to dive in and get this down. Now, what I'm going to do is break down exactly just a few simple filters you need to do to get this list of 10,000 down to just like a couple hundred, and then I'll show you how to sort through those few hundred. So first thing we want to do is right here, which is option/short, we want to go ahead and change that to say optionable, all right? Because obviously we're looking for options here. We're looking for options plays. That's going to filter it down to about 5,000 stocks, and then we can kind of move forward from there. Now, what we want to do next is go over to average volume, and we actually may change this again one more time, but for now, we want to put this over 400K, okay? That's going to allow us to look at stocks that are a little bit more liquid, so we don't have to worry about spreads or getting fills. It's going to make trading just that much easier when we have a lot more liquid stocks. Now, the next thing we want to do is over here on the performance tab, okay? Now, you can see here we have performance and we have performance too. So what we want to do with the first performance is change this to be quarter up 10%. So right here it says quarter up 10%. And this is going to show us all the stocks that in the past quarter or 90 days has grown by more than 10%. All right. Now the performance 2, what we want to do is actually have this go to the week option and have it say week down. All right. And I'll kind of show you the strategy in a second here of what that looks like. But we're basically looking for stocks that have gone up a lot in the past quarter, but are now heading down in a small pullback. All right. Now, one more thing that I like to do, this is more of a personal preference, but on the price tab over here, I like to put this typically over $20. Again, that's a personal preference. It's really up to you. But this way, I know that I'm getting a little bit more liquid, higher price stocks because those are the options that I typically like to trade. Now, as you can see below with these few filters that we have about 333 stocks. Now, that's typically more than what I see. And like I said, you can typically do this scan in just 30 minutes. But this is a little bit more than what I see. And when I find that there's over 200 or over 250, what I like to do is increase the average volume to over 1 million, okay? And that's going to simply allow me to get just much higher price stocks and also a lot more liquid stocks. And now we're down to about 200, and that to me is perfect. That's a great amount of stocks to sort through, and we can kind of go from here. Now, before I kind of show you exactly how I trade them, I want to show you the process of how I break this down because obviously looking at 200 stocks is a lot. We don't want to put that many in our watch list. So here's kind of exactly what I do. Quick interruption. I'm not here to sell you anything. All I want you to do is hit subscribe down below. I've been trading 8 years, and on this channel, I'm going to keep giving away all the tools, tips, and tricks I've used to become a profitable trader so you can do the same. Back to the video. Now, what I like to do is head over to this charts tab here. Okay, there might be an ad in the way, but you go ahead and it's going to show you all the different charts breakdown of all these different stocks. You can kind of get a quick glance of how they look. Now, Finviz puts all these different lines and like moving averages on it. I don't like any of that, so I try to just kind of phase that out. But this is going to give me a very easy, clear breakdown of what these stocks look like when it comes to my strategy. So typically how I filter these out is what I'll do is on another tab, I'll have up my TradingView platform. Now, you don't have to use TradingView. TradingView is just a free platform that I like to use. You can use any platform that you want, but I like to have a different charting platform other than this one because it's a little bit more intuitive and more to what I like to do. But essentially what I do is I scroll through these, take a quick glance, and if I see my strategy or the breakdown or the setup that I'm looking for, then I'll go ahead and bring it to my watch list here and actually do a deeper dive into it. You can see simply what I can do is sort through these and really see if my setup is there. And while we're on the topic, I'll kind of show you exactly what that setup looks like. So this is HIMS. I'm going to head over to the weekly chart. Now, even though I'm on the weekly chart or the daily chart, any example I show you in this video can be applied to any time frame. So whether it's a daily chart, 4 hour, weekly, it doesn't really matter. The thesis and the strategy stays the same. All right. So how was I able to catch HIMS? Well, HIMS I saw on this exact scanner when price was right around here. Okay. And this is a while back. I've been in this trade for quite a bit. But again, the thesis stays the same, okay? Because in the last quarter, we were way up, and on the week, we were down. This is a weekly chart. You can see this weekly candle right about here. So how did I actually catch this trade? Well, on Finviz, I saw this, but the main strategy I was trading was supply and demand. Now, if you don't understand supply and demand, it's a very simple strategy where all you have to do is draw zones on your chart, okay? And there's very simple zones that tell you exactly where to buy and where to get out if you're wrong. And you can see right here that this would be a perfect demand zone. In fact, the exact demand zone I got in on HIMS when I got in right around here on, what is that, September 3rd of 2024, okay? So I was getting in right here at the top around 14.6 of this zone. My stop loss was going to be right below this zone. So if price went below this 1205 mark, I would have got out of that trade. And you can see this thing has skyrocketed ever since. This thing peaked all the way up to $70, 300% on the option, or sorry, on the equity side. The options themselves probably rallied a lot more. I ended up taking up some partials up around here and up here, so I didn't catch this full move. Nonetheless, a really solid trade. But you can see HIMS in this example with supply and demand. All you want to look for is, like I said, we're looking for stocks that have rallied in the past 90 days or so and are now coming back down. So we're looking to catch that pullback on that move. But how do you know if I should enter right here on the pullback, if I should enter, down here or all the way down here, is what we use with supply and demand. Now, supply and demand is simply looking at institutional orders and where price is likely to reverse. Now, why did I draw this zone exactly right here? And how did I know my demand zone was going to be drawn right here? Well, all you have to do is find the exact candle that happened right before the breakout or the big move, okay? Now, if we're looking at HIMS, this is a good example on a weekly chart. You can see price comes down all the way from here. We go up here, we come down, and then we rally very, very fast, right? And you can see this is a very fast move because we go from $11 to $26 in just a few weeks, right? That is not typical for a stock like HIMS that typically ranges between $6 to $8. This thing just went parabolic. Okay, and another example of this you'll see right away is right here. I'll get to that in a second. But why did I choose this zone, or why did I draw this box as my demand zone? Well, this was the exact candle that happened right before the big move started. You can see this move basically started it. And if you want to, you can also sometimes go with the candle before that, which would be this one right here, exactly from the high to the low of that candle. And that would actually get us a much better zone. You can see we scraped it. You would have bought right there and rallied all the way ever since. But this is a good example of a very solid demand zone. Price goes up, we come back down, we have a few candles of consolidation, and then this thing just absolutely rips higher. So what happens when price comes back to that area? It's going to continue to rip, right? Speed is the most important topic when it comes to this. And so whenever you see a fast move like this, right in this area, wherever that happened, you had some crazy, crazy buying going on. A lot of institutions were buying, loading up before this fast move happened. So when price comes back down into that same area where we had a bunch of buying, you can expect price to continue moving higher and making, a lot of gains following that exact move. You can see exactly right here, this would have been another great example of a demand zone, right? We have a huge, huge move higher. That's not like all the other moves. So the candle before it right here would be our demand zone. Now, price never ended up coming back to our zone here. You can see we never came back down to it. We kind of just went right above it and then ripped higher, but that's okay. We're not here to catch every single move. We just want to catch the ones that come to our ideal entry, all right? And that's exactly how I trade this. So here's essentially what I do is I'll go through the scanning. I'll kind of take a quick glance. I'll say, okay, is there any stocks that I see right now that are coming down into a demand zone that look like they could be of play? Now, I typically go through all of these charts and just see and take a quick glance. Okay, do I see anything in here that looks pretty good? And I already see a few off the bat, right? One of them being right here, ABBV. And so what I do is I pull up my chart. I'll add it to my watch list, ABBV, just like that. I'll pull it up and I'll take a look. And I'll kind of do a deeper dive and see exactly what's going on. So ABV is already up here. Now you can see in the daily chart, this thing has been ripping. We've been kind of slowly grinding up, making really nice highs. And so I believe that this stock can continue moving higher. Now, how do I know exactly when to enter? Well, I got to find my demand zone. right? So how do I know where my demand zone is? Well, let's look at price action. You can see we're kind of slowly grinding up, making our highs, making our lows, nice wicks in these. And then right here, we just get this crazy move higher, right? And if I just kind of draw my line, you can kind of see I just followed price to a T here. This is a massive move, right? And so for us, our buyers, for our demand zone, we want to put that right kind of where that zone initially started here, right? And for us, that's going to be right here because we want to find the exact candle before the big move starts, which for me would be right here at this candle that happened on September 29th. So what I can do is take a box from the high to the low, extend it out, right? And I can color it whatever I want. This is going to be my demand zone. And so I have a very incredible trade where I can get into this option right down here, put my stop loss right below the low, and I can target all the way up here at the highs for a massive move. And that's essentially the process that I do and go through to catch these moves. I can have very low risk, very high reward, and I'm simply kind of scanning through these, seeing if there's any stocks I like. And honestly, there are a lot of stocks, but it won't take you that long to go through it. And again, I can even do this live and kind of show you, are there any stocks that I see or any tickers on here that look really, really good? And right here, I find one. B, this stock has been ripping extremely fast, but what I see on here in the corner of my eye is that we have this little like fast move that happens right here, right? So if I go in B and I load this stock, it looks like it's a mining group. I can see, yes, this thing has been taken off, but where did the real kind of fast move happen? Right here, right? You can see we have a little bit of fast move here. We have nice consolidation, and we really start to rip here. So what I want to do is draw my box on the candle right before that move, which would be right here, extend it out, and then I'm simply going to set an alert and wait, just like this, boom, 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 for price to come down to this exact area. That's where I'm going to want to buy for a move higher. And really, this is all I'm doing. I'm spending 30 minutes a week going through these setups, seeing where my demand zones are, setting alerts, and waiting for them to get into them so I can capture these massive, massive high risk reward moves. And so now the biggest question becomes, which options do I actually trade to profit the most off of this? And so what you can do is, if you look at Tasty Trade, this is just one of my brokers. There's a lot of different brokers you can use, but I'm just going to use this to show off the option chain. I have the stock B, the Sparrow Mining Group, pulled up right now. So you can have B look up. Obviously, we're at 32 bucks as I'm filming this. You can see all the different options chains. So which options do I actually want to get into? Now, obviously, if you want to catch the biggest 1,000, 2,000, 3,000% gains, you're going to want to get really far out of the money options. But I'm going to show you exactly how to get this, because in order to catch these massive moves, you want to be able to sell these options when they become in the money, right? Because that's going to allow you to get that data and allow you to maximize those profits simply by doing that. So here's kind of my process for what I do. So let's say, again, I have my demand zone, and I want to enter when price comes down right here. Okay, so we're going to look to enter. I'm just going to draw it as a line here, right at this like $30 mark, okay? Now, what I like to do is compare past price action, right? So if I look recently, right, we kind of have two massive moves, right? We have this first move. I can just draw it as a box that goes from this low to this high here, right? This is move number one. And then we have another massive move. We look at the bigger picture that goes from kind of this low right here all the way up to this high here, right? And the cool thing is I like to use boxes because it shows you not only the height or the price difference, but also the time difference here. And I draw these boxes like this. So now I have my two boxes of what price previously has done, and I can kind of filter it and do it exactly of what I think is going to happen when price comes back down. So let's say price comes back down exactly. We take this first range here, and let's say, we give it a few days for price to come down. Let's say it enters right around here. Now we can say, okay, price has a very good chance, because it's shown us it can do this in the past, of going exactly to about $38, right? And so if we know price can go to $38, because we've just done that same move in the past, if this is my strategy, I can say, okay, let's say, and I'll get to the expirations in a second, but let's just pick this one as a random one, right? If we know price can hit our price target of $38, we want to make sure we're in the money at expiration. So what I would do for this one is get the 37 or the 36 option. So that would be all the way down here for 88 bucks or 68 bucks. I would get into one of these because they're going to end up being around $2.50, $3 if we end up getting our exact move and we're able to get in the money, right? Now, let's say, for example, we're going for a bigger move, and that's one of the trades we could take, but we also want to get in another move that looks like this, Well, now we're looking at much better options. Now we're looking for a move all the way up to $45. And so for that, I would want to be looking at getting down here at the 44 option or 43, 42. Any of these ones would be all right. And I'm getting about 30, 40 cents to make about, if they get in the money, $3. That's close to like a 700, 800% gain. Now the question is, which expiration do I want to get? Well, the cool thing is using this box method, it basically tells you exactly how much time those moves took in the past, and you can kind of do the math on it and see exactly where it's going to end up. So again, let's just look at this one for the example here. This was a pretty unique move that happened here. Very unlikely to have the exact same move pan out, but something like this is a lot more likely. So if price comes back down, and let's say it takes another week until we enter, and we get in right here around October 24th. Actually, for the example's sake, let's just say we enter in today. So let's say price tomorrow just dumps, and we enter at the same day today. Now, using our simple, math basis, we can see at the end of our box, it ends up being December 3rd, 2025, right? So if we're expecting price to hit $45 December 3rd, that's kind of the expiration we want to get. Now, a very big rule of thumb that I like to do is I like to add 3 to 4 weeks out, or typically like 20% of this move, because it usually isn't always exactly the same. It can always take longer, and typically you can still catch these massive moves getting very far out expirations. A lot of people think you need to get 1 week, 0 DTs, 2 weeks to catch these moves. That's not the case. That is nonsense. So what I like to do is say, okay, this was about from October to December. It's about 2 months. If I want to be conservative, I'm going to add an extra 50% of this. So I'll add about an extra month. So look to get basically the January 2026s, which would be right here. And then we're going to look to get, if we're getting the 45 price target, the 44s or the 43s, which would put us all out all the way here at 44, 43. So we can get in for about 70 cents. Now, these spreads are a little bit wide. Maybe we can get in about 50, 60 cents if we catch a good spread here. And honestly, if price dumps to our entry, these ones are actually probably going to be worth closer to like, 40 cents, 50 cents, 30 cents maybe, depending on when we get in and how the spreads actually look. But this is going to set up for a very nice 400, 500% gain if this moves end up happening. And again, our risk is super, super limited. We're only risking from this high down to this low here. So there's a lot of opportunity to make, a massive gain using this exact strategy. So that's essentially my process. And I hope you guys did enjoy this video. Please go ahead and subscribe down below, as I'm always putting out new content, new videos. It's a newer channel. I've been trading 8 years, and I really want to show you all the different tips and strategies that I use to become a profitable trader to help you all with the same. So go ahead, hit subscribe. I'll see you all in the next video.